Hello and welcome to Blue Chip Now, the podcast that gives you insider access to content that we tailor specifically for our clients. Join us as we break down the markets, debunk the headlines, and keep you ahead of the curve. Let's dive in. Hello and welcome back to another episode of Blue Chip Now. You have Daniel Dusina, Chief Investment Officer.
Matt Mondoux, Senior Financial Advisor.
And Dan Seder, Managing Partner.
Big items to talk through today. Main topics are going to be three things. Number one, U.S. and Iran, peace breakthrough, shifting through markets. Point number two, SpaceX completing the largest IPO in market history. We'll talk about why it's important, what the market reaction was, why investors should care. And then third and finally, we will talk through inflation and the Federal Reserve and how that does somewhat remain the key risk at this juncture. So the U.S. and Iran, the relationship there really has been the dominant market story for the last almost 3 months at this point. And so you've had this back and forth where there is perceived progress on a ceasefire / formal agreement and then breakdowns. And then more recently, as of right now, we do have reports of a formal agreement being struck after months of conflict in the Persian Gulf. So this is obviously important for a number of reasons, one of which is around oil. A formal agreement would open the Strait of Hormuz. That's one of the world's most important oil shipping routes. That strait handles a substantial share of global oil exports, as we've talked about on this podcast before. During the conflict, you had massive fears around supply disruptions, and that's why oil prices moved sharply higher to begin the second quarter and end of first quarter this year. So, Dan, why should investors, or I'm sorry, Matt, I think you're probably better suited to talk about this, but why should investors care about this perceived peace progress between the U.S. and Iran?
Yeah, I mean, this is it gets to be quite a tangled web, right? So number one, when we think of rising oil, inflation, because oil is an input cost for a lot of businesses, right? So yeah, we pay it at the pump, but there's also transportation to get goods from a port to a store. So energy is just interwoven into the fabric of all consumer prices that we end up paying. So obviously that, oil falling is going to ease the pain at the pump, hopefully reduce costs, maybe food costs, etc. But also, we can even get as deep as this potentially could pave the way for the Fed to cut rates. So as inflation continues to ease, the Fed's going to have a little more leeway to potentially cut rates, which will flow even more through the economy.
Right.
So a lot of things, we think of oil, we feel it at the gas pump, but it can really touch a lot of different areas of the economy.
Yeah.
Matt, Daniel, real quick on gas prices. How long will it take for this to impact gas prices for the end consumer?
It's tough to say, but I feel like this analogy that is often used with regards to commodity prices and how it relates to gasoline is evident here. There is this phenomenon called the rocket and feather effect. So as you see this conflict emerge in the Middle East, oil prices shoot up like a rocket. Well, the perception is then that at the pump, what consumers experience, prices fall like a feather. So I wouldn't expect gas prices to drop precipitously, meaning I don't think you're going to get back to sub $3 a gallon anytime in the next couple of weeks. And the same can be said for inflation readings. I mean, it's not like this conflict ending and supply through the Strait of Hormuz normalizing is going to just completely dissipate all of our price concerns overnight. But it does pave the way for progress. And that's honestly, in my view, what investors are going to care more about. For consumers, yes, I don't think it's going to be an immediate drop at the pump, but I think the flow through in terms of the economy and the relevant companies, I think is more important.
So generally, if this deal is struck and transportation of oil normalizes, are we looking at days, weeks, or months?
I think for it to show up in the data, you're probably looking at months.
Got it.
And I think that the reason that I'm okay with that is because investors are comfortable with it. For example, I mean, the big trade that's happened off of all of this, I mean, there's three assets that you can look at that have been incredibly predictable through this whole thing. When you got the flare-up of the conflict or breakdown in peace talks, what happens? Oil prices go higher, bond yields go higher, stocks go lower. And the opposite is true when there was perceived progress. That has been the playbook the entire time. So when you see progress being made, and last week CPI comes in hot, up 4+% year over year, and the market is okay with that, that tells me that investors are expecting this outcome. They are also not expecting it to last forever. If you look at break-even inflation rates, which is essentially based on bond market yields, what investors are expecting from inflation over the next, say, 5 years, it's not the 4.2% that's running year over year. It's actually closer to the Fed's target of 2.5%. So that's why I'm okay with it taking a little bit longer and not showing up immediately. The other thing I would say is a part of this progress on negotiations trade, it has been into growth stocks. The AI trade, tech sector in general, as the runway has been perceived as more clear, that's been the primary driver of equity markets. So recent gains in semiconductor companies, you can view it as, yes, there are tailwinds there that relate specifically to the industry, like shortages of memory chips and AI computing capacity. But also it's also related to confidence in the market. Is the runway clear? Are there other disruptions that exist?
And it goes back to also interest rates. The lower the interest rates are, the more an investor's going to value future cash flows that are further out.
Right. Yeah. And that, again, that's been the playbook. It's been almost scarily predictable. If you get to the desk and you see the news flow is negative between U.S. and Iran, you can almost assure yourself that oil prices are going higher, bond yields are going higher, and stocks are going lower.
So an official deal is supposed to be inked on Friday, to be determined what happens between now and Friday.
Yeah,
Time
correct. So this has by far and away been the biggest market consuming event this year so far. And again, I think it's hard to say for sure, but any evidence that the runway is being cleared, I think, is ultimately a good sign, especially ahead of earnings coming in for the second quarter. Second topic here, we had SpaceX completing the largest IPO in market history last week. So this has clearly been one of the most anticipated IPOs in history. SpaceX raised approximately $75 billion in its public offering, achieving a market valuation above $2 trillion. The $75 billion they raised is a big figure because the largest previous IPO was Saudi Aramco, and that was just a hair under $30 billion. So a little more than double the previous. And yes, you did see shares get the almost expected first day pop after beginning trading on Friday, June 12th. And you did see the IPO attracting some pretty meaningful institutional demand from things like pension funds, sovereign wealth funds, but also retail investors. I have some comments as to some of my takeaways and why this is important. But I'd be curious to hear from you two. Why was this so important, and why should investors care?
Daniel, I think it's a reflection of the confidence that investors have in the current market environment. So if investors have the ability to take on risk and an appetite for risk, they'll participate in this type of IPO. If the market environment is less than attractive and investors are worried, they're probably not going to be apt to take on additional risk. These are risky propositions. No one knows. There isn't price history in terms of where the stock has gone in the past. So it's really, really hard to identify as an investor. There's a headline, there's a story behind it. It's easy to get excited. It's a cocktail party type conversation. And when investors feel aggressive and have an appetite for risk, they'll participate. But so I think it's an indication or a reflection of the general market environment that we're in right now being generally positive.
Yeah. No, and I think that's a good point because the timing of this, quite frankly, couldn't be much better. So yes, large publicly traded companies that IPO do generally get this first day pop, at least if you could look back through history. SpaceX is also getting the benefit of today, its second day and first full day of being publicly traded on June 15th, you're getting the benefit of positive progress between U.S. and Iran, lifting the entire market. S&P's up 1.5% today. So like it's well timed, I would say that. Some of my takeaways, there were some pretty interesting mechanics behind the scene on this IPO, and some of them are somewhat non-traditional. So the fact that you had big brokerage houses lowering the minimum account balance required to invest in the IPO is interesting. And also interesting is the fact that SpaceX has kind of laddered their lockup periods for existing shareholders, whether that was current employees, previous employees, or other folks that held this in the private market. They are unlocking the ability to sell shares, to monetize those positions at a bit earlier of dates than I think is traditional. And yes, there are metrics behind it, which I won't go through all of them today, but it is just a little bit interesting when you compare that to the fact that the previous 10 largest IPOs in U.S. history have all offered negative price return over the first year of trading. So I'm not going to be a doomsdayist here, but like the setup is kind of crazy. This is a company that's being valued in a way that expects growth over the next 10 years to a level that we saw over and above what NVIDIA did over the last 5 years. And I'm not going to say that that's not possible, but I think it just hammers home your point, Dan, that this is reflective of market risk appetite, and clearly risk assets are being absorbed by investors right now.
Well, and SpaceX is a name. It's Elon Musk. The stock's trading at, I think, over 100 times revenue, which, might not be a big a deal if it were a $10 billion company, but coming in at a $2 trillion company trading at over 100 times revenue, I think that adds to your case. Like the valuation, the future valuation prospect is pretty dim.
Yeah. It's just, again, one interesting item is that, this SpaceX will most likely, when we run the numbers, technically fall into our investment universe. So I personally am looking forward to digging into the weeds of the company a little bit, trying to understand if some portions of this elevated valuation are warranted, and seeing where, it might not be, right?
And I mean, I also think, investors need to be aware, there's two other high profile IPOs that are expected this year, OpenAI and Anthropic. So there was a lot riding on this IPO. I mean, from a banker's perspective, investment banking companies taking this company public, this needed to go well.
Yeah.
By all indications, it has gone well. It's going to pave the way for those two other companies to go public. So, and we'll see what the market environment's like then. But that's another, potentially $200 billion of equity getting put on the market. So there's a lot of supply that needs to meet a lot of demand.
Yeah. Yeah. Well said. Final topic here. We are going to touch on inflation and the Federal Reserve and how that, as the U.S. and Iran conflict kind of fades off into the distance, hopefully, ends up becoming the key risk for markets. So, I would say through the conflict between the U.S. and Iran, we've cited the fact that higher oil prices have been a major driver of markets, and they've been a major driver of inflation as well. So annual CPI running at approximately 4.2%. That's clearly above the level that the Federal Reserve would like. And at the same time, you are getting kind of mixed readings from the labor market and other portions of the economy. So the Fed faces a pretty difficult balancing act. If inflation remains elevated, you might have interest rates staying higher for longer, meaning borrowing costs remain elevated and stock valuations could come under pressure. But if you do get inflation starting to run a little bit cooler as the impact of oil and broader energy dissipates, rate hikes become a lot less likely, and instead you might be looking again at rate cuts, lower bond yields, and better support for stocks. I mean, outside of that, is there anything that you think investors should be paying attention to with regards to inflation and rates and the Fed?
I think the investor community has to pay attention to the Fed. It's not exciting to talk about. It's not a topic that sparks a lot of enthusiasm because I really feel like headlines and politics drive sentiment. You have those that might lean one direction or the other politically, and that shapes how they view the direction of the markets. You might have other people that think in terms of the economy and prices, and yes, that matters. But boy, oh boy, the Fed is the ultimate driver there. They are the puppet master, and what the Fed does as a single organization is much more influential to the markets than a headline, than a war, than politics. The Fed is so influential, and at the end of the day, interest rates impact stocks, bonds, real estate, currencies, commodities. Everything is impacted by interest rates. Daniel, the Fed funds futures right now on interest rates. Are we still pricing in one hike by December?
Yeah, that's correct.
Okay, so if rates cool, if Iran and everything kind of eases, then maybe it's not a rate cut, but maybe it's not a rate hike, and that's a movement in future interest rates in the right direction to support higher stocks, and I think generally a positive thing for investors.
Yeah, and it's going to be interesting because this week we have the recently appointed Kevin Warsh, who's the new chairman of the Federal Reserve, is going to have his first meeting with the FOMC. Mm-hmm. So I think investors are going to be laser focused not on just specifically the outcome, the interest rate decision, or call it guiding. It's going to be about how he speaks about the current environment. And investors are going to be laser focused on that because they want to understand, how are you thinking about the trajectory for interest rates right now? How are you thinking about the size of the Fed's balance sheet? What can we glean from your tone? This is a big deal. I mean, we've been with Jerome Powell for 8 years, right? So
it's a big deal because the markets are a discounting mechanism for the future. They're looking forward 9 or 12 months into the future. And so if they start giving guidance, if Kevin Warsh starts giving guidance that rates could potentially come down, that will impact pricing immediately. The other thing that I think is important here, as rates, and let's hope that inflation doesn't take off. Let's hope that inflation is tempered at some level. But if rates come down and the yield that investors are earning on money markets starts or continues to drop in the direction, because at one point during COVID, a money market was paying 6%, some crazy rate, and that's come down, and now they're maybe mid to upper threes. But if that starts dropping all that much lower, all the money on the sidelines is going to go to where it's treated best. It's like water. It flows to where it's treated best. And if money flows out of money markets into assets like stocks that are gaining more momentum because of the market environment that we're in, the fear of missing out, more attractive return profiles in stocks. If you start getting a meaningful movement from all the trillions of dollars that's in money markets right now on the retail side into things like stocks, that is going to be a secondary fuel for the market to continue its momentum and to go higher.
Right. Yeah, I'd agree with that. You can view that as somewhat of placing a floor under traditional assets like stocks and bonds. Anything else before we wrap up today, Matt, Dan?
That's it for me.
Call it a wrap.
Okay, great. Just recap. We talked through some of our takeaways from potential peace breakthrough between the U.S. and Iran, some of our commentary and why we think investors should care about SpaceX completing the largest IPO in market history, and then closing out with some of our own thoughts on inflation, the Federal Reserve, and how that could be a pretty key item for the markets over the coming months. Thank you all, as always, for listening in. Until next time.